Hello, Uncle Jim here. Today I want to share with you how I was able to make $495 in premium earlier this week in probably less than an hour. I'm also going to share with you a new stock that I recently did the wheel strategy on, and that'll be at the end of the video, so stay tuned. I think you're really going to enjoy what I have for you today. Now, how did I actually make 495 in less than an hour? Well, the three trades are above. You can actually see them. The first was a cover call. I'm not going to go into a lot of detail with these, but I was able to sell a cover call. It's not quite a leap. It's close to a year out, and I picked up $310. This was actually for two contracts, and I believe it was at $75. So if Coke is $75 in another year, I'm more than happy to sell it at 75. And this was a fair amount of cash to pick up. So I'm trying to pull in a little bit more cash from covered calls. So I've been looking at closing existing ones, and then when the market does have an up time like it did last week, I'm trying to sell more covered calls to bring in a little bit more cash, especially as we're dealing with this bear market. The next trade that I did was I rolled Micron. I rolled it out a couple weeks, and I picked up another $74 with it, and I was actually able to lower the strike price from 70 to 69. So I like Micron. I do think it's going to come bounding back up. It may actually come up today or tomorrow because I believe it had earnings today. But it's a company I like. It's got good earnings. It's got pays a fairly good dividend, I believe. Actually, it may not pay a whole lot of a dividend. I'm not sure. I'd have to check that again. Now, the last trade is BKE. This is Buckle. This is kind of an amazing company, and this is the one that I'm going to share with you, selling a put on it, and talk a little bit more about it. But to keep things simple, it pays close to a 5% dividend, and that's just the standard dividend. It does special dividends every year that, in a lot of cases, are more than its regular dividend. So, in a sense, you can make a whole lot of extra cash by owning BKE, and it also has really good numbers. It doesn't mean the numbers are going to stay good after especially if we go into a recession and people start buying less. But I'll talk a little bit more about that at the end of the video, and I encourage you to stay to the end of the video so I can share with you more about it. And actually, I'll share how to sell a cash secured put with Schwab. It's fairly straightforward. It's a little bit easier than some of the other brokerages, and that's what I like about it. So we'll talk more about that at the end of the video. I also wanted to talk about the fact that we are going to have a bounce. I mentioned this in my last video, and a lot of that bounce occurs in the first 30 days. In some cases, close to 30% of the bounce is within the first 30 days. So you don't want to be out of the market when it turns around, because it turns around very rapidly. And if you're trying to time it, you won't do very well. So that's why I'm letting a fair number of my shares or positions get assigned. Especially with the ones I'm okay with being assigned. Things like Intel and Cisco. And then I I have to strive to everyone managing your cash at this point in the game, especially at the bottom of a bear market. And again, I'm not sure we're at the bottom, but I do believe we're within maybe 5-10% of the bottom. It's important to manage your cash. I'm doing that by doing more work with covered calls, especially when we have some of these bear bounces like we did last week, where like with Coca-Cola, you can sell some covered calls. So I'm closing them in the hope that I can create a new covered call and bring in even more premium. And then you also have to look at cash secured puts versus credit spreads. In a lot of cases, I found a lot of people are mitigating their risk by buying puts, so there isn't as much opportunity to get inexpensive puts. And then also with cash secured puts, your market balance and margin available and cash available will show, pretty much, since it's a cash secure put, it'll keep the whole amount into consideration. Whereas a credit spread, you may get yourself in a little bit more trouble, especially being at the bottom of the bear market. To give you for an example, is in the trade that I share at the end of the video, is a $25 strike price. Now, if it's a cash secured put, it uses all the cash, 2,500, takes that into consideration. Now, if I had done a vertical put credit spread and say it was a 500 spread, it only looks at that 500 as your margin or cash, which is typically okay. But in the instance where things are going down so much and before you know it, you're deep in the money with some of your securities, you you may not have enough cash to deal with that, especially if it gets assigned early. So, in some ways, a cash secured put at this time is a little safer, and that's also why I like to do the option wheel strategy. I'm only doing it with stocks I really want to own, and most stocks I do trade in. I mentioned this numerous times, are stocks I do want to own. The exception, and you guys saw that in the last video, if you watched the last video, was big lots, and I actually have sold my big lots positions. I believe I still have one more contract that's deep in the money that I'm still figuring out what to do with. One got assigned, but I went ahead. I had bought a put on that, and I actually had it assigned, actually, literally a couple hours ago. So just keep that in mind. And then also understanding in some cases it may make sense to buy a put um, to hedge your bet or to protect yourself a little bit. And I'm doing a little bit more of that too. I'm looking at some of my really expensive cash secured puts. I may look at potentially hedging and buying a put, and even actually look at buying some calls too. Some of these stocks have gotten so cheap that it does. I'm beginning to think it does make sense to look at buying some calls on some stocks I really want to own and potentially getting them down the road really cheap. And then, as always, rolling. If I can roll, I will roll. But in some instances, I haven't been able to, and I've taken small losses to be able to buy myself more time. Because again, buying yourself more time, at some point, the market is going to hit that bottom and it's going to bounce up. If I buy myself enough time to get past that bounce, well, they no longer will be in the money or deep in the money. Maybe they'll be kind of within a dollar, maybe $2 in the money, and I'm able to roll them for a profit. So, just wanted to share that with you, and I I hope you're dealing with this bear market. It is tough. It's a lot easier to sell trades when the market's going sideways or up, but with a bear market, and we don't have many of these, it's definitely been a little bit more of a challenge. So I hope you're doing okay. Um, and let's go ahead and jump into the next part of the video. So stay tuned. I'm going to actually jump into that now. Okay, I've opened up my Schwab account, and the company that I was talking about in the beginning of this video is Buckle, BKE. This is the brands like Wrangler. Kind of makes sense. That the name of the company relates to what they sell, and this is kind of an amazing company. They have pretty good earnings. They're selling for, I feel like, a true discount. I believe in their instance, it's like the baby got thrown out with the bathwater. If we come down, you can see they've been hit pretty hard, even over 5 years. They're, I mean, you can go back here and it was a little bit higher. But they, over the last year, this is probably the lowest point of the year. It's down 42%. Now, their earnings look really good. If you come down and you look at their earnings, um, they beat the last 4 quarters by a fairly good amount. They've done quite well. And what's really amazing, if you take a look at their dividends, let's jump in and look at their dividends. They have a lot of special dividends. So even without the special dividends, they're paying almost a 5% dividend rate at the current price that they are. And with the special dividends, it's almost through the roof, and you can see it. Let's expand some of these. So if you look at 221, they paid a really nice special dividend, almost, what is that, $5, $5.65. And every year it looks like at the end of the year, or more than here, they did it. Well, this is 2019 special dividend, $1.25, $2. Previous year's special, $1. So almost every year they've done special dividends. Doesn't mean they'll do it every year, but last year was by far the most, and they're doing really well this year. So, and they've been increasing the dividend. This is kind of crazy because of the special dividend, but That's another way to look at it. You can see here they did $1 of special dividend and then $1 of regular dividend. So you potentially can make some really good income with this. So this is the company that I want to look at doing a the wheel on. I'm actually going to sell a put, and we can jump into there. And what I'm going to do is I'm going to go out and find a good contract to sell a put on with the, I'm perfectly okay if it expires or if it gets assigned. So what I'm looking at is to go 51 days out, and I'm going to pick this $25, which is quite a bit below where they are currently. I believe, what are they? They're 28.49. So 25 would still be another 10% lower than where they are now. Um, so here they are at 25. You can see the delta is a little high for me, 2.27. But again, since I'm doing the wheel and I really want to own them and like the idea of getting those dividends, I'm going to go ahead and select this, and I'm going to come back up and switch to puts. And yeah, there we go. We can see where it was selected. Let's click on trade. And I'm only going to do one contract. I'm going to do it as a market order. So here we've got, you can look at the top, BKE, which is buckle, put. Here's the expiration day, 8/19/22. $25 is the strike price. I'm going to say sell to open since I'm opening the contract. And if it gets assigned, um, then I would pick it up at $25 a share. So I'm picking up 100 on the front end, and most likely I can pick up another 100 on the back end, selling a covered call if it actually gets assigned. So next, I'm actually going to do. We can see here it's a market order. I'm going to say review the order. It's saying I would get $99.35, and let's go ahead and place the order. And it went through. Now, for those of you who have not watched my videos before, I like to do market orders. I like to get in and out as quickly as possible. And I like to do them especially because Schwab will do improvements. So if they can get a little bit better premium for you, they will. You can see here, these are different things I've done. You can see I actually got a price improvement on when I bought 15 shares of the Schwab US Dividend Equity ETF. And let's come here, and I actually got a price improvement with the trade I just did on Buckle. I got $11 more than I thought, so I made $111 in selling the put at 25. So, well, it'll be interesting. My plan is to do another video at the end of this, if it gets assigned or doesn't get assigned, and then maybe next month, if it doesn't get assigned, not next month, I believe this is August 8/19, then I'll do another one, and I'll do it a little bit lower and take in a little bit more premium. But I'm thinking the market's going to drop again another 10% from where we are now. I could be wrong. No one can really guess what the market's going to do. But at 25, I'd be more than happy to own Buckle. It's would pay 5.5%, not even including the special dividends. So um, so you can see the wonder of doing this. Um, if it happens on both ends, I would be making a really good return. Plus, Buckle is a company I'd like to own. So if I decide not to sell, let it get assigned once I sell a covered call on it, then that's okay too. I'm perfectly fine with keeping it. But the idea of the wheel is like I just sold this put and I made $111. If it gets assigned, then I could sell a covered call and I can probably make another $100 on it. Again, selling the covered call fairly close to the money. So just say I was able to do this again, I'd make another $1.11, which is literally $225 on a $2,500 investment, which is like 10% in about 3 months. Because if I get assigned on 8/19 and then I sell a covered call and it gets assigned the next month, I would have owned it for 3 months. So that's almost like a 15 or 20% return. And then I can again sell another put and own it again. So that's what I wanted to show you guys. It's amazing, how you can do this. It's been a little bit more difficult with the market recently because it keeps going down and down and down. But I really like Buckle. I think it's a great company to invest in, and with these special dividends, it's amazing how much income you can make off it. So I hope you enjoyed this. As always, hit that like button, subscribe. If you want to take a look at my Patreon memberships, take a look. The links will be below. I share all this kind of information and special content. And if you do the higher end, I do a weekly meeting which we talk about these kind of trades and what I'm doing. So there you go. I hope you enjoyed this and have a wonderful day.